Yeah, I'll do that now. Yep, okay.
No, you can sit down. You get into the board, so.
Yep, almost.
Ready? Yep.
Pass them out. This is Joe. Well, one of these gone.
I have a. I know I brought one extra.
Okay.
This is a tentative, correct?
Yeah, tentative draft. Yeah, we're still just waiting to complete the justice court order. We're waiting for a couple of bank statements. So once we get that complete, I'll make sure everything all at once. But as far as the audit itself, the other reports are all done. So
I emailed Christina, so she said that she sent everything. Do you know if maybe she got, you just didn't process it?
No, she sent everything, but when Jen was here earlier, we still needed December 15 and January 16 bank statements.
Okay. I'll email her again.
Yeah, but you know, she's aware that she was supposed to get it to us by the end of the day, so I could bring a draft in.
Okay.
So we don't have the details for that.
Okay.
Once we get that, then we can talk, and then
Okay.
I'll follow up on everything with the bank statements. So, anyway, my name is Chris Reno with the firm Cullen Danowski. We're up in Poquott Station. We're the external auditor for the village. We do roughly 20 plus villages, and 2/3 of our practice is government as far as counting and auditing. 6 partners, roughly 50 of us all together. And anyway, so we're hired by the board to primarily render an opinion on the financial statements. That's a relatively free material in the statements. And the first report that we issue is the financial statements. We render the opinion. So on page 1 is our report. This is based on generally accepted auditing standards. Okay. So the report itself is an unmodified opinion, except for the fixed assets that we can talk about as far as doing an inventory per se. I have a detailed list. So there's a disclaimer on fixed assets, but all the other funds unmodified in the opinion, as far as general fund, trust agency. Okay. And that's the year end of the village. Okay. And then then the rest of it's just your financial statements themselves. And so on page 4, we have basically the balance sheet. And so you have one governmental fund type, which is your general fund, the main operating fund. You have one fiduciary fund, which is a modified opinion. And then you have your non-current governmental assets, which used to be known as the fixed assets. Okay? So at the end of the day, as far as fund balance goes, we end the year with $99,307, which is comprised of 3 components. One non-spendable, which is just prepaid expenditures, which is only $1,400. That's just prepaid insurance. So since that's already been paid, it has to be carved out of your unassigned fund balance, which is what's left over. And out of your unassigned fund balance, there's 2 components there. Historically, there was only one component, which was your unassigned fund balance, which is left over after everything's all spent and done. But this past year, there was some snow removal. So you received money, you didn't spend the full amount, and it was decided by the village to, carve that out and assign it. So we have about roughly $25,000 assigned for snow removal, and another 73,000 for unassigned fund balance.
Now, these are in separate accounts? That's not in
No,
general
they're-
funds?
No, they're all in the general fund, but general fund's comprised of 5 different components. You know, you have your, what you call it, non-spendable, which is usually inventory, prepaid expenditures, like prepaid insurance, and then there's the restricted, which is, by either municipal law, in school districts, education law. That's like, if you had issued bonds and, you had, excess money, you have a reserve for debt, something like that. And there's general municipal law specifically for that. You would know.
Oh, well, my question is like the snow money.
Right.
Can be used for snow,
Correct.
but it can't be used out of general funds.
Yeah.
No,
Okay.
it's in general fund,
No,
it can
I-
only be
yeah.
snow.
Oh,
No.
snow.
Yeah. No, restricted is by law. Okay. So once you set up a restricted fund, you've got to use it specifically for that. Then there's something called committed, which doesn't apply to villages. The fourth one is assigned. That's within the law. So if you decide that you don't want to use it for snow anymore, you can easily just put it right back.
Good to know, thank you.
Okay.
Because we don't know what the show will bring.
So that's what I'm saying. You decide that doesn't snow anymore, and you can take it out. So, okay. And then you have your unassigned fund balance. So, talking with the comptroller, as far as the big question is, how much am I allowed to keep on unassigned fund balance? And from talking with the comptroller's office, they say between 10 to 20% of next year's budget. And where you're at with the 73, you're at 15%, right in the middle. Perfect. If you didn't have the snow, believe it or not, you're right at 20. So you're right in that perfect area as far as the village goes. And I have a couple of villages, they have like 30%, and I have a couple that have almost nothing. So, 10 to 20 is like what they think is, good. Okay, so that's that. And then we go to the next page, and then that's basically, it would be like, it's a corporation, your income statement. So it's the money that comes, all the revenues and all the expenditures. Okay. And then that goes to beyond the footnotes in the back, which is the last page, 13 and 14. And the actual column mirrors what's on that page, but this also includes your original and revised budget, so you can see your variances within all the categories. Okay, and so at the end of the year, you're actually pretty much broke even. So you still have roughly the same amount of fund balance. So that's good. Okay.
Yeah, it's great, because we had a $44,000 expenditure that we didn't get reimbursed for, that
Correct.
we weren't expecting.
Right.
So that's fantastic.
Yeah, that was for the storm.
Crazy.
And then you had
I
some
think
excess.
someone's watching that budget.
Yeah, exactly. And then you had some excess revenues which offset that, so that's why you were able to.
Someone who made-
That was good. So that's basically the financial statements themselves. Okay. Then there's 2 other reports that you need to. Now this report is pretty standard. This is just a report from us, the auditors, to the board as far as the audit process. We talk about if there were any significant audit findings, which there weren't. We talk about if there were any difficulties with the audit. We had trouble getting information or dealing with the staff. So nothing there. Then we talk about a corrected and uncorrected misstatements. There was minor journal entries because you have Natalie's an outside accountant, so minimal journal entries. That's great. So the books are clean because at some villages we would have that this could be an effect on the financial reporting because we issue 45 different journal entries. Here, it's just
It was like 8 or 6 or 8, that's the one.
yeah.
Yeah.
And basically, they're not really corrections; they're just accruing at the end of the year. The villages operate more on like a cash basis. The year end, you have to go on the modified accrual basis with we're recording extra payables and things that are required. And accrued payroll is minimal, but it's nothing significant. So that's why you have Yeah.
Yeah, we know which ones she can reverse back.
Yeah. And, yeah, so basically, that, and, there's another report that we could issue if we had problems with, as far as significant deficiencies, material weaknesses, and that's, where, closing the books, inaccurate records, and that would be another report. Since you don't have any significant deficiencies, that's not an issue. That's just where that's where. And then the last report, as far as that I have tonight, is known as the management letter. And basically, these are just other considerations which are not considered material weaknesses or significant deficiencies. They're basically, we look at the comptroller's audit reports and take that into consideration, what they're looking for. And so basically, we start off with, commenting on the prior year comments. We had 2 comments, and they're basically policies. One was capital assets, the other one was purchasing. So the ones in process would be capital assets that we talked about, and the other one is your purchasing policy, which are put something together. We work together on that.
The capital asset.
The procurement policy.
Oh, okay.
Okay.
We did capital assets, too.
We did capital.
In July, we did that in July.
Yeah. So next year, that one will be corrected.
Okay.
And then that comes off the list too. So that, and then the other comment, which was just for the current year, which is the, budget administration as far as, reporting to the board monthly with, budget revisions, things like that.
Mhm.
So that's it. That's, pretty clean manager letter. We have some villages, that pages and pages. And, it's a good, it's really good. And then the last report that we issued would be that justice court report, which is not complete, because we just need those 2 bank statements.
Okay, and once you get them, then you'll issue the final one, right?
Yeah, then I'll have everything, and then everything gets issued when the audit's final. And, we already filed I believe we filed the AED already with the state, so we're all current.
We did.
It's just a matter of, and then, these reports don't really go anywhere, except, the justice court, they do want filed with the comptroller's office, so once we get it, that goes up there. And, the justice court reports, just basically a cash flow report, the opening balances, the receipts that came in, the disbursements that went out, and any cash balance. And then a footnote about what the portion that went to the village, and what the cost was to operate the justice court.
Okay.
And so that's pretty much it as far as the audit goes. So I'm just here for any questions.
If you can help me out, I'm new to this.
No.
So, I got it in my lap right now, so maybe you can explain a couple of things to me that I haven't had a chance to really look at.
Sure.
Now, you said we ended up pretty much even.
Correct.
Now, does that include the monies for snow and garbage and
Correct. Yeah.
chips?
Yeah, if you look on page 14, you'll see net change in fund balance. And that's your revenues less your expenditures.
So, okay, so the money that we get for the snow can be used for snow.
Yeah, that we
Right,
carved that.
but
out.
it can't be used for
Well, if you decide,
other things,
if you
It's
decide,
if we decide.
if you decide to.
for 1 year. And
No,
then it-
no, you can do it right now.
No, but you have to pay it back. Right? We don't have to pay it back? Complete
It's a
discretion
line
to
item.
spend the money no matter what?
Well, you decided to carve it out, but as a board, you can decide to
Well,
take it
explain
back.
it to me. I thought when it's a special tax and it's like garbage and snow, that's what it's dedicated for. Okay, so say next year it's $75,000. Okay? Money that we had left over from here should have been moved over for next year.
Well, if we decide to do.
Yeah.
But if we're at the end of this year, let's say we don't have a lot of snow, we have $40,000 left over at the end of the year, if the board makes the decision to use that for something else, we can.
Yeah, you have
Well, we-
No
flexibility.
matter what.
Yeah, you have flexibility,
It's a line item.
as long as everybody's on board.
Yeah, it's on the tax bill.
Parties.
Not assessed.
Oh, we have a free
Right.
breakdown.
Right.
So
So basically,
surplus.
because all I'm seeing is like it's some sort of unexplained taxes. If we take that money and put it as a general.
Well, that's your discretion, but total concept, you know, if you decide not to use it and then you're doing your next year's budget, you're going to utilize that
Could
fund
I ask
balance.
that you don't talk?
Utilize that fund balance, then you don't have to raise taxes.
Oh, yeah.
On the special stuff.
No, yeah.
So, you know, it's not, you know, it's not locked into snow, but if that's your decision as a board, you can do that. You have that flexibility. You know, I have some villages that have, you know, they just a lot, you know, X amount of dollars a year just for a
Or we
car.
could lower, or we could choose to lower how much is taxed for the snow district if we're doing it too much.
Well, yeah, that's on your discretion,
Okay.
or, you know.
So if we continually had a $10,000 or $20,000,
Or say you had a different
We've never had this,
scenario,
we've never had it.
like, you know, say something else happened, like say you had another storm.
well, I'm just trying to get a
Right.
sense.
I mean,
No,
unfortunately,
no,
we
no,
do have a
no.
surplus again, but we never
But
had one before.
say you have, you know, say, you know, you're assessing for snow, but you have a hurricane or something.
Right.
You know, you can take that money, use it for that, and then still collect more for your snow, and just take that out, you know, and then you're covered, so it's like, it's all part of the pot.
I always thought that you could do it for a year, use it for something else, but then you needed to replenish that money by the next budget cycle. No?
No, you don't have, that's discretion of the board, so as I said, you're the law.
Okay, that's why I asked, because I didn't know that.
And I'm not just here for the 2 months to do the audit and I'm gone, so you can call me year round, Audit and I are always in constant communication
Okay.
on things, so.
And was there something here that we couldn't identify how much we had in real property? Did we do that? I can,
I don't know what you're talking about.
there's a certain amount of money that we spent on cars and printers and things of that nature. What assets, was that settled? Did you determine that our assets were equal to what we were recording?
As far as on the balance sheet,
Yes.
well, we'll say for this fiscal year, that you had, you know, you bought something, you know, that goes to 4.2, so it is identified.
Well, no, I saw like for 3 years or something, we had the same
No,
number.
right. Well, that's why our suggestion is to maybe consider going out for an inventory. And then slot from there, and then, you know, now that you have the capital asset policy, you adhere to that, and you have a threshold is what you are saying is going to be considered a capital asset. And that will, you know, report the additions and the deletions and move forward. So, you know,
It's a good practice to have the inventory,
Right.
so we know what we have and what we don't have.
Did you say we have a capital asset policy?
We just didn't.
Well, they just did it this year,
Yeah.
so next
One
year.
of the first things I did.
Yeah, when we go to the line, we can put sheet. We haven't started, we just started using it this year, so when they did this audit, we didn't have one yet. We were deciding what we were gonna do, so.
First thing you did was, I think it was one thing.
Any other questions? Do you wanna stay for public comments? Either they don't have a copy, or you wanna wait till the file comes out?
Or, you know, or if they have any questions or comments, you can relay
Get them
them
to
to me,
you.
and then I
Absolutely.
can get back to you and all that.
Even the draft, this is
No, it's not final yet.
No, not until, you know, the finals have been issued and get released to the board. And the only thing that we're just waiting for is a couple things with the justice court. And then I'll communicate, you know, to the mayor and order.
We'll stay.
Okay.
Okay, thank you, thank you very much.
One public comment in a few minutes. Right?
It has something to do with him, Chris.
Yeah,
Oh,
okay, sorry.
yeah.
Thanks, Chris, nice to see you. Good job.
Have a good night.